Damon. And to kick things off, you clicked on the thumbnail because you wanted to see who that guy was that says recession is coming. So I'm going to go ahead and share my screen right now. So let's go ahead and do that. So Larry Summers, by the way, here we go from Barron's. I was just reading this, and yesterday on the podcast, if you watched the podcast, you would have heard it. Now, Larry Summers was the former US Treasury Secretary, and I found this really interesting. Again, this was in Barron's. The link is down below. That he says, if you look at history, there has never been a moment where inflation is above 4%, which we're currently well above 4%, and unemployment is below 5%, which I think we're at three something. I don't want to give that something number. And then unemployment is below 5%, where we did not have a recession within the next 2 years. So with that metric, what Larry Summers says, he's saying it's a certainty that a recession is coming. And I'm not worried about it. If you know me, I'm long in this game. I guess I would only be worried if you were taking money out in the near future, like the really near future, if you were depending on that, if you were already retired. I think, is it Warren? I don't know. Warren says so much. That guy has so much attributed to him. Everything is from Warren Buffett, right? So he says that I think if you need money, then if you can't withstand a 50% drawdown on that money within the next, 2 to 3 years, then that money should not be in the market and exposed to that 50% potential drawdown risk. So that is that. There you go. Again, that was from Barron's. Really interesting article. I would strongly suggest reading through it, but that's what I wanted to lead with to get you in the door. Now I'm going to talk about everybody's stocks, what you've got going on, and what you want us to look at. So, hey, go ahead. That was Larry Summers, what he said. What do you think about it? You worried about recession? I'm not worried about recession. One thing before we get after it, everybody. I am a little bit under the weather. I'm recuperating. I have a big, tall glass of emergency here. And I'm going to the Indy 500 this weekend. I'm leaving tomorrow morning. So as soon as this live stream is done, yours truly is going to knock himself out with NyQuil and get a good night's sleep. But fun, what I'm doing with the Indy 500 is I'm going to let the race decide a dividend stock that I buy next week. How am I doing that? Well, let me share that and show y'all now. I got to get better at this live stream. Here we go. Like this, boom, bop, ba-da, bop. So what I did, what you're looking at here is my, is there a better way to put this on the screen? I don't know. I'll just make it bigger for all of those. I guess I won't make it bigger. It's not letting me. Oh my God. Anyway, I guess go back, pause the video, zoom in. What I did was so there's 33 drivers in the Indy 500. I took my combined portfolio that we share here on the board and at dapperdividends.com. There's 3 of them. And I took the lowest position dividend stock. So ONL is in there. I want to sell that. I don't really want to add. That's the Realty Income spinoff. So going from the bottom up, as you can see, with the number 1 spot is Vici Properties, VICI, and that's Caesars. They just acquired MGM Growth Properties recently. So I gave each of these stocks the driver that is corresponding. So the lowest position, I shouldn't say worst, got the number 1 spot, which is Scott Dixon has Vici. And I just went up the list on from there. So check it. Number 2, Alex Palau has Snap-on, ticker SNA. And these are all in order, except you'll notice, well, you won't notice if you're on your phone because this is probably so damn small, is Rinus VK. He's Dutch, and Koninklijke Ahold de Laza is, shout out to my guy, European Dividend Growth Investor, for helping me along with that. He is Dutch. Ahold de Laza is a Dutch grocer, so I had to put the Dutch dividend stock with the Dutch driver. I couldn't ignore that. So there it is. We got 33 drivers, 33 stocks. I'll do a really quick video next week. I'll take a little bit of B-roll footage. So whoever, there we go. We stopped sharing. My God. So whoever wins the race, that is who is going to be the dividend stock that's I'm going to buy next week. So yeah, hey, if I see there's 7 of you watching and I'm ready. I want to hang out. I want to chat. If you want to give me a stock, I'll share the portfolio screen, or not the portfolio. I'll share Simply Safe Dividends, and we will look at the. Well, don't everybody go and pile all in at once. My God. Yeah. So again, I'm ready. We'll talk stocks. All I want to do here is I needed an outlet. I wanted to hang out with everyone for a little bit. I don't know. We'll go maybe 45 minutes or so. See what you guys throw out there. What stocks, and we'll look them up on Simply Safe Dividends. Kind of use that as the springboard to see what they have to say. Oh, another fun little tidbit of news is that I am now officially a Simply. I wish Simply Safe Dividends. No, I did reach out to them. I am a seekingalpha.com affiliate, so you'll at random times say, hey, they're having a sale, and right now they are 50% off Memorial Day sale till June 1st, where you can get their yearly service for 50% off. Really interesting site. Try it out for free. Again, link in the description below. If you click that, I am an affiliate, you'll get I'll get a little bit of commission on that with no additional sales to you. All right. Anyway, I saw Suzuki Man. Yes. GLW, my friend. All right. Let's look up GLW. Now, I'm not familiar with that off the top of my head. And let me go ahead and share the screen. How's the sound? Good? Everything good? Good God sound. Boy, my brain's a little bit tired. Anyway, so let's go ahead and share this. There we go. GLW. Let's throw it up on the screen. Oh, Corning. Nice. So Corning, there we go. Let me shut this. I don't need that open. Corning, 77. Pretty safe. Nice. I've never really looked into Corning. Obviously, I know the Corning glass. 3.07% dividend yield. Nice. Very nice dividend growth. 13% right here. Large cap, not bad. They could have some more room to grow. Sometimes they say it's better to look at the lower market cap companies, right? Because they can have much higher room to grow. There's a much bigger ceiling. Instead of like a Microsoft, you got to bust through that ceiling to the next level. So let's see, just go through a little bit about them. During the recession, 61% recession return, negative 61% to the S&P's negative 55. So they're not very recession friendly, although they did maintain it during the recession. Dividend growth, yeah, looks nice up and to the right. 14 years uninterrupted, 11 years dividend growth streak is nice to see. Yeah, they've been raising it every 4 quarters, about 2 cents. So 20 to 22, 22, 24, and then 24 to 27. So that's why they had that little bit of a jump. Dividend yield is above the 5-year average. The forward PE is below the 5-year average. They're close to the low end of the 52-week range. And free cash flow payout ratio 56. It's funny when you see these 1171s, there must have been an acquisition or something there that just completely threw it off for that year. Some big expense that's, out of the ordinary for them. So 56%, not bad. $1.76 free cash flow per share. I like to see that, although it did come down a little bit off of 21. Sales growth's falling just a little bit. Look at that. Buying back shares, only 847 million. So that's interesting now. They're chopping up. So they dropped from 1140 to 895, and then they increased and then cut and increased a bit. So when they need money, I guess they're just going to be increasing a little bit to get that money. Selling shares. Nice return on equity, return on invested capital. Like to see those in the mid-teens. For return on equity, nice. Net debt to capital is a little bit high, or a little bit low. Excuse me. Still getting my bearings here. All right, I don't know. GLW looks pretty good to me. So, by the way, I'm chatting. Here we go. All right. So I popped on. The funny thing, when I'm sharing that screen, maybe I'm not smart enough, but I can't see what you guys are saying. So maybe I should run through them just a little bit quicker. Yeah. Citizen of the year, NVIDIA stock thoughts. I am waiting for them to come a little bit lower. I'm hoping they will. I know that they just missed a little bit on their guidance. I think they beat on top line and bottom line, but their guide was it was something stupid like the street expected 8.4 billion and they came in at 8.1 billion that they're guiding, so they got crushed because of it, which is just silly. I mean, they're still making a ton of money. They're just a fantastic company. Nvidia is nice. Yeah, according Simply Safe or Seeking Alpha digital dividends. Which one? I like them both the same. They're both a little bit different animals. So as you just saw, we ran through Simply Safe dividends. It's really, really nice. I'll show you when they do like dividend updates. That's fantastic. Yeah, Seeking Alpha has a lot of writers. There is so much content on there that they have just the community. I guess I'm calling the community of writers, right? I know Dividend Diplomats, they write for Seeking Alpha. There's just a ton of information that you can always read on there. So let's see. There you go, Jeremy. What is up, Jerry? By the way, dividendstockpile.com. Check out his website. Yeah, let's look at AQN real quick. I think they just had an increase, right? Oh, let me share my screen. It might help to share the screen. Let's share it right here. All right, let's plug in AQN. So Algonquin Power and Utilities. Now that's interesting. They give them a dividend safety score of 41, which is borderline safe. And let's see. Market cap 9 billion. So mid cap, they got room to grow. Although how much can they really grow? Is there a utility, right? $14.50 price. We'll see where that's at. Yeah, dividend yield 4.99%. Looks pretty good. Recession sales down 17%. Oh, that's interesting. No stock price history during the recession. Wonder why that is. That's all these sites, I guess they have their glitches. I know on Seeking Alpha sometimes they'll show one of the dividend kings as having like a 7-year dividend growth streak. Yeah, that's a little concerning right here to see that during the recession they really cut that dividend hard, and then in 2016 they cut it again and it's been going up. So now or Jeremy, do you know what was that they cut it? Because this is either what I'm talking about, which they show an 11-year growth streak, but it looks like the dividend got cut. So they might have spun off, because if companies spin off sometimes, then that could be a reason why. But interesting. I skipped right over the payment details. Annual payout, 72 cents. Oh, they're Canadian too. I didn't realize that. We have Algonquin, Illinois here, so I keep thinking it sounds American to me. That could be the currency, right? Because they're foreign. Let's see. Yeah, let's see. Let me go through it quick. I won't through too many of these numbers here. Down to the 52-week price range. You know what? Here, let me do this. Let me pop back in, you guys, because I don't want to get too behind on the messages here. Hey, I'm still learning all this stuff. So, yeah, Algonquin, I think I might rather just stick with like a Duke or Consolidated Edison, something like that. Would you say Suzuki? The low delta. I'm assuming you meant delta. Oh, debt. I'm sorry. They probably did have a low delta. Low debt to capital on the balance sheet. Yeah, nice. That's currency fluctuation, Jeremy says. I see. Pyrex. Suzuki Man says that Corning sold off Pyrex. I didn't know that. That's real interesting. Hey, is the sound level okay? Yeah, thumbs up. Good. Yeah, if you're just joining us, feel free to throw out a stock. Let's see. All right, I'm going to get to you, Jeremy. I see you talking about it there. Starbucks video. Nice, Eric. Hey, don't say I told you. I was just showing it was possible. Yeah, I figured that one might be a little bit clickbaity, but I thought, the hell cares? I'm going to put it out there. And I guess the only downside would be is that, and I probably should have said this, is that if it's in a taxable, right, you're going to have to pay income tax on the dividends, but it's still possible. Maybe that little buffer I left in there where I bumped it up to $5, that could be if you're pulling it out of the taxable every time they pay that dividend. So, but thank you for that. That was kind of a fun one to make. Yeah, Jeremy says Algonquin's pushing hard into renewables. I think a lot of the utilities are going to start trying to lean into renewables. Who was it? Total Energies, I read this week, just bought Clearway, something like that. 50% a stake in Clearway, I think it was Energy, because for the renewables. And yeah, I think that's where they're gonna. Yeah, I think Buffett bought some Algonquin. I don't know. That's interesting. I didn't see that come across the wire. Let's see. Yeah, currency fluctuation. Talked about that to Jeremy. Yeah, so what do you want to see? All right, let's see. MFC and land. I see it on their chest. I'll just answer this real quick. Am I cashing out in anticipation of the Great Depression too? No, absolutely not. I'm looking for more buying opportunities. And, it is, I will say, it is a little bit tempting to think if the market is just going to crash to pull your money out, sit on cash like Warren does, right? And then wait for that deep correction. But I'm just not that good. I'm a working stiff. Like I said, I weld for a living, and I don't want to get caught. I don't want it to bounce and then shoot up, and then I'm sitting on cash while everything's rocketing up. So, Jeremy, MFC. All right, let's check out MFC. I'll do both of those, and then I will pop back in here. Go on, flip the old screen. MFC. Manulife. Oh, I do think there's another Canadian, right? I think it's a Canadian company. MFC, 5.61% yield, dividend safety score of only 49, so borderline safe. Big growth, 18%. Okay. Well, let's get a couple more metrics here. Oof. Yeah, look at the recession return. I've been looking at these. I have a video coming out where I went over some of the stocks that had a really good, or not good, yeah, good recession return, because it wasn't bad like this. They lost 82% during the recession, and the S&P again was only 55% down. Yeah, interesting. So more of this, I don't know if that's currency. Again, I'm not that familiar with it. Looks like it cut, but dividend growth streak 0 years. So apparently they did not. They have the frozen dividend, but it shows they grew at 18% in 2022 this past February. Yeah, so they had a good spell there where they were frozen at 28. And the dividend yield is above the 5-year, and the forward P is just below the 5-year. 52-week range. Oh, they don't move much, 16 to 21 bucks. And free cash flow payout ratio. So they're an insurer. Interesting. I'd have to look in this one a little bit more. I think Shamir is from Canada. Shares outstanding. Okay, they buy them back a little bit. Then they slightly increased. So they've kind of kept around 1.95 billion. And nice, though. Look at that, though. Last 12 months, really big return on equity and invested capital. Okay, cool. Oh, and land. I think I stopped sharing there. Now, let's see. Clear. Oh, you got it. Okay. So it is Clearway. Or CWEN. Nice. Yeah, you can't time the market. You said it, brother. I'm just too nervous that I'm gonna get stuck. And I'm gonna get stuck holding that cash, and then I'm gonna be waiting for it to pull back, and it's just I'm not even gonna bother with it. Broadmark real. No, don't promise. Question away, man. I want to talk with you guys. I don't know everything. I'm here to learn, share ideas. Broadmark Realty. Let's see. I'm completely unfamiliar with Broadmark, so just for you, Chess, let's go ahead and throw it up on the board. I probably should have said this. Back to top. I don't know the ticker. They'll fill it in for me. There we go. Oof. Unsafe 30. BRMK is the ticker. It's a REIT. Let's see. I bet they got a whole bunch of cutting. Oh, only 972 million market cap. So that's pretty itty bitty teeny tiny. They got room to grow. Yeah. Did they just start paying a dividend maybe? 2019. Don't know. It's been frozen at 7 cents, it looks like. And the dividend yield is 11.28%, man. That sends off alarm bells to me with a dividend yield that high. 52-week range. See, this is what always gets me. It's $7 a share, right? I mean, if it was just a solid 11%, you think everybody would be buying it, but free cash flow payout ratio, so I don't know why they don't have the AFFO here. But they look like they're paying out a lot of money. I just want to see their shares. 133, all right, 132 to 133. Return on equity, 7%. Well, I think I would stay away from it. I don't know enough about it, but that's an interesting one, though. I mean, hey, if you can capture that yield for maybe a couple cycles and you just want to get in and out and try and get some money. Ooh, I see an HII, Suzuki man. Best Buy's earnings, or BBY. That's not Best Buy, is it? Honestly, I don't know. I didn't look. If anybody knows, here, I'll put them up there. Let Miguel know about ticker BBY. I think they are. Is that? I don't know. Who is that? Let me see. Yeah, Best Buy. They got a dividend. Here, we'll throw it on the board here for you, Miguel. Does anybody watch the Indy 500? Anyone? I'm not into racing. That's why I had to make myself have interest in it. So I'm going to get to see who. You guys might not know. Go back to the start of the video when this is over. I shared that I'm going to be. I took 33 of my dividend stocks and I put each one on a driver in the race. And then I'm going to, whoever wins the race, I'm going to buy a share of that company next week. So kind of a fun way to keep me interested. Best Buy, yeah, I mean, we all know Best Buy, 26% growth. I did a video on them, I think about maybe several months ago. Recession returns slightly better than the S&P, but check that out. During the last recession, they grew their sales 5.6%. That's pretty badass if you ask me. A lot of big growing. Look at that CAGR for 10 years, 17%, 20% 5-year CAGR, 26% last increase. I don't know how sustainable that is over the long run. I would think it's going to start to taper off, but 18 years dividend growth. Look at that. Look at Best Buy. They're slowly creeping up on becoming a dividend aristocrat, which is 25 years of consecutive dividend increases, 88 cents a share. Look at that dividend yield, 4.29 is way above the 5-year average. The 4 PE, nice. It's below the 5-year average and pretty close to the 52-week low of $72. They were as high as 138. Free cash flow payout ratio, 78%. That's a little high. I'd like to see that coming back. And let's just go to the shares. I'll go through these quicker. I like that they put these two side by side. I love to see that the shares outstanding are decreasing and the sales are increasing, because sales, I think, are a little bit more hard to manipulate, right? Than earnings per share, because you can financially engineer that number. But the sales, that's the revenue. You need revenue going up. So I love to see shares decreasing, and because that's increasing your ownership in the company without you having to do anything extra. So that's nice to see. Wow, sky high return on equity on invested capital. I think the ROE can be from debt. I think that they have a bit of debt, 54% net debt to capital. That's a stupid interest coverage ratio. So when you see the ICR number, that tells us how much operating income a company has to cover every $1 of interest expense. And currently Best Buy has $109.60 of operating income to cover every $1 of interest expense. That's almost J&J legendary numbers right there. So yeah, Best Buy looks really interesting. But what worries me is that I don't remember the last time I was in a Best Buy. I don't remember the last time I bought anything from Best Buy. So I don't know if that's just me, but yeah, HII. I will get to that in a second. I know that's Huntington Ingalls, right? Now you're gonna get in my my neck of the woods here. That was okay. We'll go ahead and share it. They build ships for the Navy. They build Submarines, carriers, they build, Huntington Ingalls, 68, 2.23% yield, starting to come down. Mid cap, only 8.25 billion. They grew their recession sales because they're tied into the government. So, as long as government's spending money, dividend growth, pretty quick, starting to taper off. 17% 5-year CAGR, 3.5% last 5 years. 9 years, they're almost a dividend achiever. If you increase your dividend for 10 consecutive years, you become a dividend achiever. Yeah, I had to think about that. $1.18. All right, cool. Hey, I like it. They're building ships. They're building things for the U.S. Navy. Look at that 5-year average, though. The yield is only 1.68, and it's currently 2.23. So toward the higher end of the 52-week range. And let me just look at the free cash flow payout ratio. Okay, that's good to see it below 60, but it's starting to edge up there. And let's just go to the shares outstanding. 40.3 they're buying back, and their sales are going up. Nice. I like to see that. Decent return on equity, very nice. And ROIC. Cool. I don't know. They look good to me, and I've been tempted to buy HII just because they are, I was in the Navy. I was in the U.S. Navy. I was on an aircraft carrier, the USS John C. Stennis. Oh, Jeremy, you are right. They do. But real quick, if anybody wants to know, I worked on weapons elevators. There was 9 of them, 6 lower stage elevators that took bombs, rockets, laser guided bombs, missiles, all the ordnance from the magazines to the hangar deck. And then there was 3 upper stage elevators that took all of that ordnance from the hangar deck to the flight deck. And then that's when a different division would pull them off and they would load all the ordnance onto the fighter jets. So it was very Top Gunny. And it was kind of fun. We just went to it right before COVID broke out. That's that thing I got here. I don't know. Let's see it. I don't know how well this will show up, but yeah, that's us on the John C. Stennis. So honestly, I don't know why the hell I have that thing over there, but nobody can see it. Let's take a look at you, Jeremy, here in a second. So what did I miss? MFC is Canadian. They have, Manulife, longer dividend growth. Okay, so it is a currency. So that's good to know. We were talking about when you see it looks like a cut on the chart. They didn't. It's currency fluctuation. I see that in Europe a lot where like Unilever, I think they'll show that they have cut the dividend and they really haven't. It's just currency fluctuation. Lockheed Martin. I'm in Lockheed Martin. So that's kind of been my military exposure. And I thought about selling out of it when it was so high, but then I would pay the capital gains tax and I want to bother with that. Who else we got here? Let's see. You're going, Citizen. Really? Okay. That's going to be fun. Maybe we'll meet up, have a beer with you. All right, what was I going to do? Oh, Jeremy. Yeah, does it cover closed-end funds? Now it does. Throw out a closed-end fund. Let me. What do you got? If I can ask, I'm not really familiar with any closed-end funds, but I haven't even looked. I just saw an email that Simply Safe Dividends was covering closed-end funds. So wait for you to throw that out there. By the way, I said at the intro I'm going to the Indy 500, and we'll. I'm looking forward to it. I'm not a big race guy, but I like the camaraderie. I like people watching, hanging out with friends. There we go. Sorry. It's probably getting annoying to hear my voice all scratchy, but it's getting better. I was a lot worse yesterday. All right, BDJ. Let's flip on over to the other side and share. All right. Let's go back to the top here. BDJ. Blackrock Enhanced Equity Dividend Trust. Yeah, so there it is. It's a closed-end fund. Gives it a borderline safety score, 50. Yeah, this is really interesting. I haven't looked at any closed-end funds yet. I know that's kind of Jeremy's thing. Who we got to have you back on the do another live stream with you, man. That was fun. I kind of stopped doing them for like 3 weeks or something, but I wanted to hang out with all y'all. Let's look through this. I don't know what I'm going to find here. So shows their performance versus other equity closed-end funds. Interesting. Premium to net asset value. I can't see you, Jeremy, but correct me. That -4% means it's not at a deal, right? Because it has the value of all the stocks in there, but the price of the closed-end fund can trade above or below it. So if you buy it below, it would show a plus. Is that right? I don't know. See, I'm going to learn something here. Shows the volatility. Their leverage is 0. I don't know what NII coverage is. Net asset value per share. Okay, this is interesting. The dividend growth. Now, I don't know if this is normal. Looks like it's been coming down. Yeah, it's -2% over the last 10 years, but 12% was their last growth. Shows what they pay. Yeah, I'm just not big on closed-end funds. This is a little new for me. Let's see here. Excuse me. Their total return, 8.3% per year. Volatility is lower than 82% of all equity closed-end funds, and the expense ratio is only 0.85, so it's lower than 98% of them. And yeah, shows a 10-year return. Interesting. So there you go, everybody. If you had closed-end funds are your thing, shows their total returns. You can. They got them on there now. So, God, my throat is gonna be okay. Okay, let's see what I missed here. BST. All right, I'll look at that in a second. Oh, look at this. Citizen's gonna be in the snake pit. So, anybody who doesn't know what they do at the Indy is they have the center. Well, we're gonna walk down by it. Hit me up on Twitter, man. At RustyRam78. Send me a private message. Yeah, so I know we walk around by it on the infield. They have like a big, huge EDM fest, like a dance music fest, and you would not even know there's a race going on. I was there 2 years ago, or I don't know, before COVID. They had it 1 year I was there, and it's so loud and everybody's dancing, and it's like the craziest thing. There's a golf course in the middle of the Indy 500. It's crazy. So yeah, so discount to NAV is a good thing. So was that good at -4%? Is that what you want to look for, or do you want it to be positive? So -4%, was that good for the closed-end funds? Let's see. What do we got? BST. I want to look at for my own entertainment here. We were talking, this is closed-end funds on Simply Safe Dividends. So we're going to look up BST here. They just started covering these. I'm guessing it's another Blackrock. Science and Technology. They give that on a 60. Okay, so premium to net asset value is -1%. So let us know if that is good or if it should be positive to be good, because I don't know. So dividend yield 8.32%. We won't spend too much time on this, but dividend growth looks better than the last one. Dividend yield is way above the 5-year average. And let's see, 16.8% total return over 5 years. Nice, and it's been a little bit volatile. So, yeah, that's interesting. I've never. I do have Instagram. I don't know what it is there. Just I really kind of abandoned it. I posted a little bit. I can't think of it. You'd have to I think if you search Dapper dividends, you'll find it. You'll know what it is when it's there. Let's see. Yeah, so let us know, Jeremy. But yeah, I don't know, guys. What do you want me to look up anything else? Know my opinion on something? Throw out an idea. I'd love to hear it. Hey, was that confusing on the thumbnail that I put Larry Summers and I put recession is coming? Because, I thought about just doing, let's look up your stocks, and maybe I'll do that for the next one. I don't know if this was too confusing because I put it in the title. APD, Air Products. Nice. All right, Suzuki man, let's look at it. Yeah, I'm curious. I'm still trying to figure out this YouTube game, and it's really interesting. It's really really a crazy thing trying to connect and get people's attention and get your message out there. Speaking of getting a message out there, let's look at APD. I know it's a good stock. I know are they a dividend king? Air Products. This is something I use. I use acetylene and oxygen for my job. So APD is a company I'm familiar with. Air Gas, another one. 95 safety score, very safe. I know I've looked at them before, but if anyone knows, one thing that's thrown me off a little bit is, let's see, recession return, about in line with the S&P. 39 years they've been growing their dividend for, but check that out, 11% 20-year CAGR, 11% 5-year, and 8% in the last increase. And yeah, $1.62 currently per quarter, $6.48 per share. Average yield is 2.29, so they're above the 5-year and they're below. This is one, and I'll show you why I remember now. I didn't get in. They're toward the low end of the 52-week at 242. Was this, if anybody knows, I don't know why this is so skewed. The free cash flow payout ratio was 103% in 19, 152% in 20, 147% in 21, and 348% in the trailing 12 months. Why is that so high? I don't know. I meant to look into it, but I haven't yet. So if anybody knows why APD has such a crazy high free cash flow payout ratio, I would love to know. And let me look at their debt. Yeah, so they're increasing shares a little bit. I don't like to see that. So I don't know if they're covering some of the dividend with the share increases. Sales is still going up. So that makes me a little bit nervous. Decent ROE and ROI. Net debt is only 0.23%, and they can easily cover the interest on the debt. But yeah, that makes me a little bit nervous. I'd love to know why that. I'd love to know why APD has such a super high free cash flow payout ratio, and they're seeming to be consistently increasing the shares a little bit. So that makes me worried. And I don't know, it's just my gut. That's why I have a hard time investing in APD. Let's see. You got my answer, Jeremy. If the discount is negative, that means you are buying at a price less than what the underlying stocks. Okay, so that's good. See, I learned something. So there you go. If you're looking at closed-end funds and you see that negative, then that is a good thing. You're buying at a discount. So, all right, cool, man. Thank you for clearing that up. And IIPR. All right, let's see. I'll get you in a second here. Citizen, yeah, okay, cool. I'll check that later. And the PEP options trading, not very good. I kind of chickened out. I did a $40 one last week, but this week, I don't know. I got a little nervous, and then the market dropped, and it's come back a little bit today. So I probably will do one next week. But I'm not in a hurry, and I don't want to rush it. And I'm trying not to get greedy, where it's so easy to start looking at those, start looking closer and closer to the in the money price, and those premiums start going up and up. And it's, I don't want to get caught, and I don't want to have to lose those shares. So, well, not lose. I could get back in. What do we got here? Yeah, IIPR. I'm just going to go ahead and say while I'm plugging this in that I think they are still solid. I really think it was a hit piece by Blue Orca, was it? I think, I don't remember what their safety score is here, but Yeah, 60 borderline safe. That yield is sky high. Hey, maybe Blue Orca wanted to get some shares on sale. So they have a really high dividend growth rate. Let's see, we're not around during the recession. They just started, in 16, 17. I think New Year's Day of 2017, maybe, I don't know. I think that's when they started. Yeah, look at those increases, man. They were increasing almost every quarter, which I don't know. That can't keep going on. That's crazy. Uh, there it is. Price to AFFO is low. Dividend yield is high. And yeah, $122. Hey, I may just have to pick up another share of this. That's pretty dang low. AFFO payout ratio. So Simply Save Dividends likes to see below 75%. They're at 77. But hey, free cash flow per share. Look at that, just going up every year. $8.41. Sales growth only 63%. The AFFO growth is starting to slow, but as a REIT, I don't get too worried when I see REITs that are increasing their shares outstanding as long as they are increasing the sales, because that's what they do to buy properties and help us out as shareholders. So that doesn't really worry me that much. But I think as I look over here, 60% free cash flow margin, they don't have a lot of debt at all, and they have a good interest coverage ratio. I think a lot of people were a little freaked out by that hit piece, but hey, I'm going to buy them. I think they're still good. And yeah, well, I don't know, guys. I think the 8 of us that are still here, if anybody's watching this in replay and you've made it this far, kudos. Let me know. I'm gonna get. Oh, I might be going on Monday with Ryan. Why am I holding my glass up here? For Christ's sake! Showing you my old orange glass. Let me know what you'd want to talk about in a future video. I mean, I'm still figuring these live streams out, and I don't. Or do you like it better when I talk with like Jeremy or I have a guest, or is it just at times I feel like I'm just like rambling too much? I feel like I have too much time to fill, and hell, I don't know, everybody. I'm gonna go, but let me know what you think, and let me know what you think if you like it better when I talk with somebody. I might be on Ryan Williams' channel on Monday. I think he talked about doing a live stream over there. I'll let you know if I do that. Well, I don't know. People, do you have a question for me? Somebody asked me a non-dividend question. How about that? That way I don't have to think. So I'm gonna crack open this this bubbly. Can't read that. I'm gonna crack open this bubbly and let me know. Just ask me a question. Somebody. Or not, I don't care. I could play a game of chicken. A staring contest. This guy's nuts. Anyways, I will be at Indy 500 this weekend. Might hang out, have a beer with Citizen. He's going to be in the dance party, partying it up. We'll see if our paths cross. Anyway. Well, whoever you are, number 8 that just popped in, what's up? How's it going? Ask a question. There we go. I need a mic. I feel like I'm screaming at the computer. Yeah. Well, if I can kind of do this, man, I mean, I've made so many mistakes in this YouTube thing. It's just, put Joyce the rant. Oh, I could do that. I could do a live stream where I'll just ramble about anything and everything but dividend stocks, right? Maybe it'll be like a Seinfeld thing. I'll do a live stream where the only thing I absolutely will not talk about is dividend stocks on a dividend investing channel. Kind of car do I drive? We have a 2011 GMC Acadia, and it's old, and we just dumped $2,000 into it because the air conditioning lines, I'm not a big car guy, for the front and back had to be replaced, and it was an easy decision. I mean, we're not going to find a car for that much, for that size. We're not going to find a car for for $2,000 that suits our needs. AWR, AWR, and AWK. I don't own either. I know that AWK is pretty popular in the dividend investing community. Oh, the lights in the back here. These were my daughters I stole from. They are come with this nifty little remote, and it's just like a, I don't know. It's just a. I messed it up. Oops. It's like just a light strip. You know, you can. There you go. Change the colors, and I don't know. It's all kinds of. There you go, green. I think there was a flashing one, but I don't think I've touched that thing since I put them up there. This damn here. I don't know. There was a. I think like this does. I don't know. There was a way to cycle through the lights, but yeah, I don't remember who they are, or who makes them. Just my daughter had them, and I was like, "Oh, those are cool." And I don't know this damn thing. Yeah, so they're just Amazon from China. I can't get it to do it. I don't know. Now I broke it. We'll go red. We'll leave it red. So yeah, they have sticky tape. Don't put them on a ceiling though. We did that, and it starts pulling the paint down with it. Kind of sucks, but yeah, they're I don't know. It's too dark. It's weird. I can't get it to show up right on camera. Here, you know what? Watch this. Check this out. Hold on. If I do this, they'll show up. There. They get pretty I don't know. Pretty mood lighty. What are we even talking about now? Yeah, so that's what we do. Oh, did I get you? Yeah, I talked about AWK. They're popular in the dividend community. The bubbly. And all right, well, hey, I don't know if anybody wants to ask me anything else. I got nothing going on for another, 10 minutes or so. Just drinking my bubbly. What else could I ramble about? I don't know. What do you want me to ramble about? What do you want to see me talk about on the channel next? What's a video idea? You don't know? I don't know. We'll talk about whatever the hell you want to talk about. My daughter just graduated 8th grade, so I am now officially the parent of a high schooler. That's a little bit weird for me, but hey, man, it's life. We're all getting older. I can't even imagine anybody would still be watching this on the replay, but you know what? Maybe. Hey, stranger things have happened. When's Stranger Things coming back? When will gas get cheaper? Great question. It will get cheap. It'll eventually get cheaper. So if gas were to keep going up, I mean, it would be at like $200 a barrel if it was going to double again. It's not going to happen, right? We were at 50s and then we were at 100. That doubled. So to double from here would be 200. That's not going to happen. It's going to revert toward the mean. It's going to revert under $90 a barrel. It's just a matter of time, right? The demand destruction is what they call it. So the cure for high prices is high prices, because people are going to augment. And I was just in the shower and they already said that people are talking about driving less or deciding if they want to drive for their Memorial Day plans. So right there, people are going to shift. People are going to augment. Supply is going to start coming up, and there's going to be more supply coming online. So, the people's destroying the people's demand, and then the supply, because it's so lucrative right now, everybody's going to want to be pumping. So that's just going to increase the supply, and eventually it'll start coming down. So when? I don't know. Eventually. So sometime in the next few years, it's going to happen. All right, maybe I should wrap this up. It's been about 50 minutes. So, yeah, I don't know. Did you guys like Jeremy on? Maybe next time. Maybe we'll have you on next weekend. I don't think I got anything going on. I don't know. We can ramble on. Talk about whatever you guys want to talk about. And, yeah, I don't know. Oh, how about music? Did you check this out? I don't know if you can hear this. Hear future pop music. I can't hear it. So, I don't know. You know what I'm gonna do before I go, since I got you. I'm gonna put this. I'm gonna put this on my channel. Yeah. Somebody, before I turn this off, let me know if you like the music. Because I'm going to find this on YouTube right now and see if I can hear it. Oh, there it is. There I am. Recession is coming. Sorry. Didn't mean to blow your ears out. To blow your rears out. Hold on. I don't like it. It's a little loud. These people are nuts. People are like, this guy's a lunatic. Yeah, I don't know. It shouldn't, because that is on Restream. That's like part of their music. They just have these. I don't know here. They have like free ones because I use the free Restream, like down tempo. So it shouldn't be a song it shouldn't be a song that somebody owns the rights to, copyrighted song. But well, there's been a few people wandering in. Hello, how's it going? We're just wrapping up here. I'm going to the Indy 500. I'm leaving tomorrow morning to drive down, and yeah, I don't know. I'm gonna get off. I'm gonna knock myself out with NyQuil, and the hell, man, I don't know. If you want me to go, I'll go. But I don't have anything left to say. I'm all out of words. So whoever you two people are that just came in and watching a lunatic, we're drinking bubbly, and I salute you. What the hell are you guys doing just watching this? All right, I'm gonna go. I'm getting off. So yeah, I'll look for that message, citizen. I don't know your name. We'll learn your name, and yeah, I don't know. I had a fun blast. I was hoping to get a few more people here, look up a few more stocks, but it's okay. I will. I've been Russ. Nice having you, and I will talk to you